What is going on, chill investors? All right, guys. So I wanted to go over HIMS because everyone's got questions on exactly how am I going to manage my position. Okay. So if I was interested, or if you guys are interested, you guys can set a covered call if you have shares. Okay. And what you do is clearly through the meeting, they described basically they're not worried about today. They're worried about 12 months, 24 months, and 36 months out. So it's a long-term play. Doesn't mean that it won't have volatility in between those years where it does a spike and it comes down, does a spike and, does what stocks do. So one way you can play it, if you're more interested in just like, okay, give me some more cash so I can buy more things while the price is down here, right? For everything. Like, so right now, if you wanted to, you can, okay, for example, I own HIMS. My cost basis is $28. I am down. I understand that. I understand that it's a 1, 2, 3 year outlook on the company. Have they done some questionable things as far as gone about their business recently? I would say, yeah, they're maybe a little careless, but I think they did it strategically. But in our eyes, it looks reckless. Um, but that doesn't change the business for me. So everyone's talking about the subscription growth. That subscription growth, yes, is like organic growth, meaning that people who freshly signed up, but that does not include the growth of which members or subscribers they gained from their acquisitions, both from Zava and from potentially Eucalyptus later this year. So that doesn't include that. Okay. So their subscribers have drastically increased, even if the organic side of it has not. Okay. They put themselves in the position because they knew that growth would slow down because these early set companies are going to see hyperbolic growth and they're never going to maintain that growth status. Okay. Um, I don't know the numbers, but I would assume that Netflix, when starting out, had some hyperbolic quarters, and they finally found their plateau. Like they found where their growth is going to remain. Okay, HIMS is still in the early phase stages. They still have not rolled out every product. They're going to be putting wearables. They're going to be having a peptides facility. They're going to have potentially sleep medicine through Eucalyptus. They're going to have a lot of things. Okay, so I don't think the growth story is over. Okay, I just think that it requires time. Okay, and in order to make our return every year, okay, and you have to be willing to sell your shares. So I am personally still okay selling my shares, but for me personally, I'm not going to set this play up yet. Okay. I still want the market as a whole to get in a better place. Companies that are down should not be this far down. Okay. So as soon as the whole market decides that it's time to be done with this chop fest of going down, this choppy downward momentum, um, as soon as the market's done with that, then we can start looking into this play. I understand though, if you want to just go ahead and make this play right now, you can still go ahead and do it. The return is still there. Sorry. And what I would say is that you have to be okay selling your shares. Okay. Because if you set this play up and you're like, oh my God, never mind, I don't want to do it, you are going to lose money because you chose to lose money. Okay. And what I mean is that HIMS, okay, what we're talking about is a covered call, basically saying I will sell my shares on this date for this price. Okay. So for me, I own the stock at 28. Okay. As of today, these are today's numbers on February 24th at 10:20 in the morning. Okay. So HIMS, today's date, 10:24 or 2:24. Okay. I own it for 28. If I do a call, sell a call, okay, for January 17th, 2027 at a 30 strike. Okay. The stock is currently 14 and change. Okay. I make money on the share price. Okay. It doesn't matter the contract because you are going to have the same return. But basically, this gives you a whole year, okay? And what's the S&P 500 on average return you per year? 8 to 12%. on average, right? Depends if you count in dividends. Anyway, moving forward. Okay. At a 30 strike, 5 contracts, okay, here's the collateral it requires you to have this many shares to do this, okay? But here's your credit, okay? That is an 8.32% return, okay? With the remaining time left in the year. If you were to actually annualize it, it would be more like 9.3, okay? But that is still an 8.3% return. So now what happens? You gave yourself a year, you gave the stock a year to gain itself back. You still used your capital to make an 8% annual return, okay? Which perfect. That's the S&P. You just did an instant S&P 500 return with a click of a button, okay? If it's sold, it sells, okay? The stock can run. HIMS is heavily shorted. HIMS can easily, okay, with a flip of a switch, momentum shifts, okay? People turn quickly when momentum shifts. They quickly go, this is a $10 stock, and then it quickly goes, oh, this is a $40 stock. This is a $50 stock, right? Momentum and the sentiment in the whole market right now is fairly negative. I would say it's negative. But this is not the time to be selling. I don't want to sell the covered call yet. Could it go to 12, 13? Yes. But the downside to the upside, I think, is very minimal compared to what the upside is. When the whole market shifts, HIMS will shift, okay? So HIMS still has a gap up to 21, okay? Then we can start looking at doing a covered call. And maybe instead of doing a 30 now, you can do a 40 because it moved up to 20, right? So this is not the time. Down 7 or 8% today after earnings when they gave a beat, but everyone's going off of the growth and so forth. There's a bunch of things, but this is what I'm doing. I'm going to go ahead, set a covered call when the time is right. Okay. I'm not going to wait till it's 30 and do it. I'm going to do it earlier because I think they just need time on their side. Okay. I'm a long-term outlook, but I'm not crazy. I still need my capital to work for me. So what I'm going to do is as of right now, today, this is what I would do, a 30 strike for that date. If we take a look at the option chain here, January 2027, 30, okay, that puts us at a 40 delta. There's still a 40% chance the stock gets there. Okay, this is why I'm not doing it today, is because obviously a big red day equals big red premiums. So I'm not interested in that, but I am interested in doing this 30. Okay, and if we got to move up, let's just say right now 30, that's $16 move. Okay, so let's say it got to 20 and then we did a 36 or 37, I guess. Okay, so right now that'd be more like the 30 delta, but instead of getting this payment, we would get closer to this too. So that's why I'm going to wait. Okay. I'm going to wait a little bit, get that little green days just because the market goes up. It's going to float up with the market. It still floats up, okay? As of right now, everything's floating down, therefore it's going down, okay? So overall, this is the play. This is how you turn your capital into still making an 8% return for you annually while you wait for the company to turn around. Understand it. The company during this year, when you set this, you say, I'll sell it for 36, and in the meantime, it runs to 70, 80. I don't know if that's going to happen this year, but if it does, you would still be stuck for selling it for whatever the strike is that you said you would sell it for. That is the part where you cannot FOMO, okay? You cannot go, oh my God, oh my God, oh my God, oh my God, I'm losing money. You're not losing money. The only way you lose money on a covered call is that if you decide you want to close the covered call yourself, pay to close it, okay? So that can happen. You can do that, but just remember, do not get caught holding the shares on the way back down because therefore you took that loss for no reason, okay? So, but still can go ahead and make your 8.32% return if your cost average is 28. But yeah, go ahead and plug that in, see where you're at. But just remember, don't get greedy. The S&P 500 on average 8 to 12% return. You can go ahead and make that with your collateral while you wait for for me to just get back above break even, give me all my capital back, and we'll just keep running the wheel cycle against it. Okay? I got time. I'll take my 8.32%. I still have other capital to work with. As you can see, we're still making good capital. Our capital work for us on average. I don't know if it says we're averaging a 9.32% premium return right now. That's setting us up for 109% annual return. So we're setting ourselves up right. All right, guys. So that's exactly what I am looking at right now. But like I said, I would wait for a float up. But if you just want to go ahead, because the second you get this capital, this credit into your account, you get to start buying other companies that are really valued down here. Um, so personally, right? Like I hope HIMS floats up a little before other things as it's more undervalued in my eyes. Um, so that way we can buy more ONDS, more Path, more that like you can take this 1,000 and buy some more other shares or however much premium you're gonna get. But that's how I'm managing my HIMS. So I appreciate you guys. I'll see you guys out there.